And today we're 12 easy ways to get business loans, credit lines, and business credit if you're using it specifically for the purpose of real estate investing. Look, real estate investors are one of the top industries that we help, and it also happens to be one of the hardest industries to get money for. And the reason for that is because one, everybody wants to get into the real estate investing game, and a lot of people don't have experience. And two, a lot of those people fail. And three, real estate is just kind of deemed as a high-risk industry. Now, if you're in real estate or real estate investing, don't take that personally. I am in a high-risk industry as well. Everybody in financial services, mortgages, real estate, credit of any kind, we're all, hey, Pasadena, Texas, thanks for coming in. We're all in high-risk industries, including real estate investors. So because real estate investing is considered to be so high risk, it's also very difficult to get financing for. But what you might not know is there's a bunch of ways you can actually get money for the purpose of real estate investing. And today we're going to talk about 12 of these different ways that can work for you. Some have no credit requirements, some have good credit requirements, some have no revenue requirements, others have revenue requirements. Jazzy D, welcome to the scope. Thanks for coming in. So we're going to dissect it all today. We're going to dive in. We're going to talk about 12 easy ways to get money for real estate investing. We're going to dive into credit lines. We're going to dive into loans. We're going to dive into business credit. So enough of me just standing here talking. Let's get to the whiteboard. Let me figure out how to switch this. Here we go. So, and where are my whiteboard artist came in here and moved all my Sharpies to 1 point. So I got one now. Okay, so 12 easy ways to get a business loan, credit lines, and business credit for real estate investing. So we're going to start with one of my two favorite. We start with one and we end number 11 with my second favorite current funding program right now. This is called Unsecured Credit, where you can get credit lines up to 150 grand with 0% interest rates as long as you have a 680 plus FICO score or a guarantor that does. Now again, if you don't have good credit, don't get lost right now. I have plenty of options we're going to talk about that have no credit score requirements. As a matter of fact, most of these we're going to talk about have no credit requirements. So if you have bad credit, we're going to talk about probably 9 to 10 options that will still work for you. This one does require a good FICO score from you or a guarantor. You don't need any collateral. You don't need any kind of assets to pledge as collateral. And these accounts report to the business credit reporting agencies. There's no revenue requirements. So this becomes a no-doc funding program. And again, you can get approved with guarantor. Let me teach you how this program works. With unsecured financing, you can get up to 150 grand. Basically, you get about 5 to 8 times the amount of your highest credit limit revolving account you have now. Is there a reason for growth in real estate investing because less regulation as opposed to the stock market? Well, I don't know. You know, ultimately, everybody has their own reason for getting into real estate investing. I can tell you that down here, there's a huge boom. You know, you could typically get much greater returns on real estate than you can get in the stock market. From what I've seen, and on my podcast, I interview a lot of people from both sides of that spectrum that tend to agree. But everybody has their own individual reason for getting in. Usually, higher returns on real estate investing is one of the most common reasons that when I'm on my podcast show interviewing people that invest, that they go with it. So back to this topic at hand. On the unsecured financing, you can get up to 150 grand, about 5 to 8 times the amount of your highest revolving account that you have. And somebody's asking which entity you choose. LLC or corporation works good for business credit building. So you can get about 5 to 8 different credit lines. These are credit lines you could take the physical cash out on, and you get 0% for 6 to 12, 18 months. So that means not only can you get the 0% benefit of credit cards, you get the cash out capability of credit lines. Combined, you have a no-doc financing product you can get even as a startup with 0% rates for 6 to 18 months and get the cash out. It's really, really cool. But you've got to have a 680 FICO score or higher to qualify or a guarantor that does. Now, you also need to have pretty good utilization, about lower than 30% in a lot of cases, meaning you owe less than 30% of what the limits are on your credit cards. And the other thing to keep in mind is they don't want to see a bunch of inquiries. More than 6 inquiries in the last 6 months could be an issue. Ooh, going crazy with the hearts. I love it. So this is one of my favorite products because you can get it no doc. You can get it as a startup. You don't need to verify revenue. You don't need collateral. You only need good credit or a guarantor that has good credit. Charlize, thanks for coming in. I appreciate you joining. Second product. If you have credit issues, this is a great way to go. Because in a lot of cases, lenders have no credit requirements for the second product, which is business revenue lending, which also comes with cash advances. It's actually 2 funding products here in one. You can get money quickly. It's one of the fastest and easiest ways to get money. You can get funding in about 72 hours with only a 6-month review of your bank statements, and you can typically get approved to about 10 to 12% of whatever your annual revenue is. You don't need collateral. There's no good credit requirements. As a matter of fact, a lot of lenders don't even pull credit for this product. You just need to have consistent deposits. You can't be somebody that is only putting 2 or 3 deposits in your bank account, and you need to have a positive bank balance at the end of each month. And again, you guys are going, I appreciate that. That means a lot. Lets me know I'm on the right track. So revenue lending, fast, easy money. Get it in about 72 hours. Personal credit doesn't matter. Rates are much higher than what you're going to see with a lot of funding programs. I've seen rates as low as 8% on this program. I've seen rates as high as 50% plus. So depending on how much risk you have, how long you've been in business, what your credit score is, how you manage your bank account will determine how much you get approved for. But it's really fast and easy to get approved. You submit 6 months worth of bank statements. They look at your bank statements. Do you have positive cash flow in the bank account? Do you have a positive ending balance? Do you have, basically, do you have more going in than you have coming out? And are you not overdrawing the account? If you manage your bank account well, you can get approved, and they want to see about a year in business in most cases. Now, if you do have better credit, they'll typically issue you a credit line. So they'll also give you a loan and a credit line. So they may give you a $20,000 loan, or let's say a $50,000 loan, and then give you a $20,000 credit line behind you. So a really cool product, because even without great credit, you can get a credit line, and there's not a lot of those programs that are out there. And again, guys, thank you very much for going crazy on. So that brings me to number 3. Merchant cash advance is very similar to revenue lending. It's like cash flow financing, but it only looks at your credit cards, not your total deposits. And you only need to be in business 6 months and have $5,000 a month in revenue. So when we look at number 2, you've got to be in business about 1 year and have about $10,000 a month in revenue. With this option, you only need to be in business 6 months and have $5,000 a month in revenue. So much easier product to qualify for than revenue lending. And keep in mind, both 2 and 3 don't have consumer credit score requirements. If some lenders do, it's 500 or 520 credit scores. A lot of lenders don't have credit score requirements, so you can still get approved for these. Number 4, securities-based credit line. Again, no consumer credit requirements here. Stocks and bonds are used as collateral. You get rates lower than 5%, and you could borrow against stocks that you already own and still earn interest on those stocks. That you could use this program. First of all, maybe you have stocks and bonds now. If you have it, well, it's a great program because you still keep your stocks and bonds in play. You still earn the interest. You don't have to sell them. You just use it as leverage. You just hedge the stocks and bonds and tell a lender, hey, look, if I default on this loan, you take my stocks. It's as simple as that. If you don't default, then you get a great credit line at 5% or lower with no credit score requirements that works even for a startup business. So a great loan or credit line if you have stocks, or maybe you have somebody else that does. Maybe grandpa has stocks and he wants to invest in your business. Well, this is a great way for him to use his stocks, still earn interest, not have to sell them, and get you the money you need to fund the business. So there's a lot of different opportunities where maybe you don't have the stocks, but maybe somebody else that's a potential investor in your business does, and then you can use their stocks as collateral. They don't have to let go of the cash to help you. They can get a reward, whatever you choose, maybe equity in your company, a percentage of return on what your sales are, whatever it may be, and you get the reward of accessing the money you need through a low interest rate credit line that has no credit score requirements. Pretty cool way to go. To number 5. Number 5 is 401k financing, very similar. You're using a 401k as collateral instead of stocks and bonds. Okay, there's no tax penalties for this, so you could borrow against the 401k without being penalized. You're still getting a loan or credit line with rates of lower than 5%. And whatever's not with your current employer, or what's called rollable, you can actually get. So with stocks, you can borrow as much as 90% of the value of your stocks, and for a 401k, you can borrow as much as 100%. And keep in mind, it doesn't have to be your 401k. It doesn't have to be your stocks or bonds. If you have a potential investor that has stocks or bonds or 401k, you can get approved using that as collateral as well, which opens up the door with 401k financing, with securities-based financing, with unsecured credit. Here's 3 options where investors can actually help you get money for your business, people that may want to be part of your business and get a return. And none of these 3, 1, 4, and 5, they have to put physical cash in. They're just using their credit, their actual consumer credit to help you qualify, or stocks and bonds, or 401k. So if you have securities, stocks and bonds, 401k, or good credit, the number 1, 4, and 5 are great options. If you have a family member, a friend, a business partner, or somebody else that's a potential investor that has one, another great way to go as well. Account receivable financing. This is where you're using outstanding account receivables for financing up to 80% of the value of your receivables. You get the money in less than 24 hours, and you get really low rates with no credit score requirements, 1.33. AR financing in general has some of the lowest rates you're ever going to see in the business finance. With AR financing, let's say you own a business now where you have outstanding receivables. Let's say other businesses, the government, sometimes with some products, even individuals owe you money on a regular basis. You use that account receivable as collateral. You get the money borrowed against those account receivables. The lender collects on the debt, and once they get paid on the receivables, then they give you the 20% minus whatever their fee is, which is like 1.33 per every month outstanding. So it's a super low rate, no credit score requirements. You typically need to be in business about a year to get approved. And of course, for that program, you have to have some kind of account receivables to actually get approved. This one is specifically for real estate investors. I'm going to show you. Another great option is called house flipper financing, also sometimes called house reseller financing. And this is where you're using residential real estate as collateral, and you can basically get all the money you need to buy and rehab the property, because you can get a loan up to 65% of the after repair value. You only need average credit to get approved, a 660 FICO score, and you get rates of about 8% or. With house flipper programs, they're looking for 3 things. 1, average of the road credit, 650, 6 credit, 60 credit score. 2, flipping experience. They want to see that you flipped about 2 to 3 properties recently. 3, they also want to see that you have some money in the bank. If you have that, or a potential somebody that wants to invest with you has that, you can get approved for house reseller program where you can get up to 65% of the after repair value. What does that mean? What the value of the property is after you make the actual rehab repairs. This means you can literally get 100% of the money you need to buy a house and rehab the house to actually get it flipped. It's specifically designed for real estate flippers. So if you use some of these other programs we've talked about to buy your first or second house and flip them, then by the time you get to that third home, you could use this product that's specifically designed for real estate flippers and then start getting financing for multiple properties to help you with the rest of the flips. It's a really good strategy. Use some of these other options we talked about to get your initial money for the first 2 or 3 properties you do, and then after you buy the first 2 or 3 properties, then you can come in and start using house flipper financing to buy the rest of the residential properties you need. Great strategy that a lot of our real estate investing. Vendor credit. This is the beginning of where business credit starts. Okay, so this is trade credit on future purchases from vendors like Uline, Quill, for example. They report to the business credit reporting agencies, and they'll approve you regardless of personal credit. They don't even do a personal credit check. Why do you get these? You do these to get to this. If you get vendor accounts and get Uline, Quill, Monopolize Your Marketplaces, Strategic Network Solutions, these guys, you're probably going to need to build your business anyways. And you're spending a little bit of money on them, and then they're putting an account on your business credit report. The more of these accounts on your business credit report, the more credit becomes available to you. But all of this credit you can get without a personal guarantee, without a personal credit check, regardless of collateral, regardless of cash flow. Very important what I just said. Because when it comes to business lending, there's only one type of financing you can get regardless of collateral, cash flow, and good credit. Every other kind of loan that exists, you need to have either collateral, cash flow, or good credit for approval. But with vendor credit, you don't need any of those 3. So you can get approved for accounts you can use to fund your business, start building your business credit at the same time, and you don't need the cash flow, the collateral, or the good credit that you need to qualify for almost all other business loans. Get this kind of vendor credit, then you start going to store credit. And this is when you can get place credit with most major retailers using your EIN number, not a personal guarantee, no personal credit check. Okay, you're omitting the social security number from the application. Okay, and these accounts report to the business credit reporting agency. So let me show you how this can help you for real estate investing. We work with a lot of real estate investors that love this for this reasons. They're coming in and getting these kind of approvals. So they're coming in and getting $10,000 Lowe's credit cards, $25,000 Home Depot credit cards, for example. So if you're flipping homes, this is like gold to you because all the money you need to do the actual rehab for the flip, you're using with store credit. And you can get these kind of limits in less than 6 months and get these kind of limits with no personal credit check, no personal guarantee, no collateral check, no revenue check. So it's easy to get the money you need to rehab the property. And don't keep in mind, there's Visa cards, there's Bank of America cards you're going to be able to get as well. There's all kinds of store credit that becomes available. Okay, so this is really good because when you're flipping properties, you're going to need to buy the property, number one. Where's my number one? Number two, you have to get the supplies you need to rehab the property. This store credit will get you the money you need to actually do the rehab. Now, another thing that's going to help you beyond store credit is right here, which is fleet credit. Using about 10 of these accounts reported. So you need about 5 vendors to get to store credit. With about 10 total accounts reporting, you can start to get fleet cards. These are fuel cards. They help you get fuel for the vehicles. They help you do maintenance and repair. You can also get auto vehicle leasing in your business name. You can also get Visa cards and MasterCards and Amex cards like we talked about here. But the difference with these kind of credit cards, and these are real approvals from people that follow us on Periscope, the difference with this Visa for 11 and this Bank of America for 11, these didn't require a personal guarantee for approval. None of these credit accounts require a personal guarantee or a personal credit check for approval. So you can get a $16,000 fleet card to be able to put fuel in your vehicles, get auto vehicle maintenance and repairs. Okay, you can also come in and get gas cards at places like Shell and Exxon. You can be able to get the supplies you need to rehab the property at Home Depot, Lowe's. You can get Visa and Bank of America, even borrow against these to get the physical cash you need to buy the properties. So we're starting to really develop a strategy here because you're able to use unsecured financing if you have a 680 score or a guarantor with does. Or maybe you have consistent revenue to get revenue lending or merchant cash advances. Or maybe you or another investor has a 401k or securities or account receivables. You get this money you need to buy the property. Then we start to get over here and we start to get store credit at those places, Lowe's, Home Depot, etc., fuel cards to be able to actually get the money to rehab the property. You do a few flips, and now you're getting house flipper financing. So we've really just so far mapped out an entire strategy from getting you from zero all the way to a point where you can get consistent financing to flip homes here. Now this brings me to my second favorite funding program that's out there, and I'll tell you why something has to become my favorite. It's easy to get, and most people can get it. So this is a credit line that is based on account receivables or consistent revenue. You can get a credit line up to $100,000, 24-hour funding. So you can get approved immediately, get funding in about 24 hours, and all you need is revenue of about $100,000. Okay, and the rates are 0.5% to 7%. One of the lowest rate programs that's out there. So by far, my second based funding or favorite funding program that's out there, and here's why. You don't need, there's no credit check at all. There's no personal credit check. There's no business credit check at all. And somebody's saying I have 6 accounts showing on D&B and got denied with Best Buy. That may be off the top of my head. I don't know how many accounts you have to get Best Buy. But again, when you have 5 vendor accounts, it starts the process of you being able to get store credit cards. It doesn't mean that you'll be able to get all store credit cards. Let me give you an example. Sam's Club, you can't get unless you have 10 accounts reporting. So when you have 5 credit cards, you start to be able to get store credit cards. But there are other stores that you'll need 6, 7, 8, 9, 10. So if you do what you just described where you got denied for Best Buy, no worries. Apply, get some more accounts, and as that number climbs from 5 to 6 to 7 to 8, go and apply again when you have 7 accounts reporting. Apply again when you have 8. Somewhere between 5 to 10 accounts reporting, you're going to get approved for almost every major store. Just keep in mind, 5 vendor accounts starts to get you to the point where you can get the revolving store credit. Doesn't mean you'll get them all. Usually the path forward to those is 5 to 10, just so you know. So with the AR credit line, no personal credit check at all. All they do is they plug into either your bank account or they also plug into your accounting software like QuickBooks, like Xero. And what they do is they immediately automate and give you an approval decision immediately. Then you can get your credit line the next day. Once you borrow against the credit line, of course, as you pay the credit line back, you can get more access to it. That's how credit lines work. And they'll give you 12 to 24 weeks to pay back that payment. So they want you to have a revenue of about $100,000 going in a year into your bank account. As long as you have that, you could typically get approved, or you can get approved if you have account receivables, even if you don't have the $100,000. And remember, interest rates are 0.5%. 0.5% for every week you have the money outstanding. That's about $50 on every $1,000 you borrow. One of the cheapest rate programs you can get, and the easiest, because they don't care about collateral and they don't care about credit either. They don't even do a personal credit check. And somebody says, if you get denied for credit cards, does it harm your business score? No, it doesn't. Applying and getting denied for credit cards doesn't at all affect your business credit scores, because inquiries don't matter when it comes to your business credit scores. So unlike consumer credit, that can harm you. Why? Because you put inquiries on your consumer credit report, that affects about 10% of your score. It affects 10% of your FICO score. In the commercial world, your credit scores are based on payment history. So you're able to get approved, and even if you get denied, it won't have an adverse effect because inquiries to your credit score don't matter. 12, crowdfunding. Now this is where you have a good pitch and it's key to success. Kickstarter, Indigo. If crowd likes your idea, they may donate, usually don't need to be paid back. This is a great way to go if you don't have any of these other things that we talked about that you need to get approved. Okay, so crowdfunding, you can go to a place like Kickstarter, put up an awesome campaign that's creative, have some people around you that contribute money to get it kicked off and off the ground. That gets attention, Kickstarter promotes it, and you can get investing a really good way to go. And even though I went through 12, I actually have 2 bonuses for you. One of them is kind of like crowdfunding I want to teach you, but the other one's grants. HUD has grants at portal.hud.gov that you can also use to be able to get financing for real estate purchases. So make sure you check out portal.hud.gov, because that's a great place to get grants. And there's also state and local grants available too. That's a really good way to get financing for real estate. Think of it like this. You know, a lot of communities have rundown properties that they don't want to be run down, right? It affects values of homes around them. So what will happen is they will actually come in. I'm trying to see if I can find this other email about this other bonus I want to tell you about. So what will happen is they will actually come in and they will give you money to rehab properties in the area. They'll give you grants because they want you to buy the property. They want you to rehab the property because it overall improves the value overall of the actual community. So HUD grants, like we just talked about, where's that site? It's portal.hud.gov. Portal.hud.gov is a great place for HUD grants. You can also go and type in local, based on your city or state, grants there, and in doing so, you'll be able to find some great options there as well. I have one more bonus I wanted to tell you about here, and I'm going to pull that up right now. And so this is an email I just got today, and I want to show you this because if you're interested in investing in real estate, this is something pretty important that you want to know exists. So let me show you on my computer. The Tampa Real Estate Investors Alliance. Right now I'm in Tampa, so that's why I get this. And this is happening right now tonight at 6:30. And Savvy Real Estate Investors, it's an investor networking for real estate investors. These are in all kinds of communities, and there's tons of them. So what you want to do is look into networking events in your community for real estate investors. And here's what happens is a lot of people that have money go to these, but they don't want to do the work. So what happens is they say, look, I have money to invest. I don't want to do the work of finding the property and rehabbing the property and all that crap. I don't want to do that. So they go to these real estate investor meetings to network and meet people that are willing to find the property and willing to do the rehab, and they'll front the money. Guys, there's a lot of these investors at these groups, a lot of them. So even if these 12 loan programs I told you about don't work, even if the business credit doesn't work, even if the bonus of getting grants doesn't work for you, you need to find these local real estate meetings in your community. They're all over the place. And in doing so, you're going to find a lot of investors who want to invest money, but they don't want to do the work. And that's the trade-off. And they'll get all different kind of return paybacks. They might say to you, look, I want 10 grand when the property sells. I want 5%. I want 10% of what you make. It's usually a set amount of money. So what they'll do is they'll say, go find the property, bring it to me. You bring the property to them. They evaluate it. They know there's equity there. There's money to be made. They come back and go, I'm in. I just want my 5 grand, my 10 grand. They give you the money and they actually issue a note. Okay, so it's actually recorded that there's a note, a loan to you. You go buy the property, you rehab the property, you sell the property, you pay them back their money and whatever it is that they want paid. Actually, their money gets paid back when your deal closes because there's a note on the property. Now remember, when you tie this in with business credit that we talked about, huge benefit because you could use the business credit accounts to do the rehab work at real estate. So, a lot of programs we covered. Let's sum this up and let me do this. If it makes sense, feel free to go right to our website, creditsuite.com/getfunding. We can help you with any and all these programs and a lot I didn't have time to mention. You can also give us a call right here. And we can also help you right here to be able to talk more about getting the money. We never charge you a dime to get loans. Okay, the lenders will charge you, but we help you through the entire process at absolutely no cost because the lenders sometimes pay us referrals. So let's summarize. Unsecured business credit. Up to $150,000 in credit lines at 0% if you have a 680 score or a guarantor that does. If you don't have good credit, but you have consistent revenue of 10 grand a month or more in 1 year in business, this is a great option for you. If you have money coming into credit card transactions and only have 6 months in business and revenue of 5 grand, merchant cash advances, great option for you. Securities-based credit line, great option to get a low interest rate credit line of 5% if you have stocks or bonds or have a potential investor, family, friend that does. Same as 401k. You can borrow 100% of the value of a 401k if you have a 401k family friend that does. And remember that there's no tax penalties here, and with the securities base, they can still earn interest on the stocks. If you have account receivables where other people owe you money, a great way to get very low rate financing, 1.33%. Don't forget, once you have a couple house flips under your belt, you can get up to 100% of the money you need to buy and rehab the property with House Flipper. They just mainly want to see some experience. Business credit, 8, 9, and 10. This has to do with starting some business credit using accounts like Uline and Quill. Then you can get the high limit Home Depot, Lowe's that you need to do the rehab, and also get fleet credit for auto vehicle repairs, etc., as well as Visa MasterCards. And my second favorite, account receivable credit lines. If you have account receivables or consistent revenue of $100,000 a year or more, and you have accounting software or they can plug into your bank account, you can get funding in 24 hours with the real credit line. Sometimes to get more money, they may ask you for tax returns. And don't forget Kickstarter, Indigo, all these GoGo, all these places for crowdfunding. And also don't forget HUD. Portal.hud.gov for grants for real estate investing, and a lot of state and local grants are available for real estate investing as well. And then obviously don't forget about the last thing we talked about, these kind of networking events which work absolutely great for real estate investing. So if any of these make sense, if you're interested in getting access or learning more, give us a ring. We don't charge you a dime for financing. You're still going to pay whatever the lender actually charges you, but we'll even negotiate that for you. You can also go to creditsuite.com/getfunding for instant approval. A lot of stuff we went over. I happen to know this scope, what we're covering next week. So next week, we're going to talk about how to easily check your business credit scores with Dun & Bradstreet, Equifax, and Experian. And that will be taking place at Wednesday at 4 o'clock Eastern right here on Periscope. Make sure you follow us. And if you've missed this scope, it's available on Periscope for 24 hours. We put all of our scopes on our website at creditsuite.com/scope so you can access any of our previous Periscopes. And you can also go to creditsuite.com/Periscope to get a free guide on business credit building. So creditsuite.com/Periscope, free guide on business credit building. creditsuite.com/scope, you can access all of our previous Periscopes. So next Wednesday at 4 o'clock Eastern, as we dive into how to get your business credit scores easily and really cheap. I mean, super cheap with Equifax, Dun & Bradstreet, and Experian. I look forward to seeing you next Wednesday at 4 o'clock here on Periscope. Thanks, everybody. Have a great day.